Welcome to Honeystocks.com weekend stock analysis. I think it's fair to say that January was absolutely incredible for most of us that obviously know what we're doing in the stock market. So what I am going to do for you this week is this is a promo video that I'm throwing out there. I think you all know me by now. So what I'm going to do is I'm not going to spend a lot of time giving out a big intro to who I am, etc. I'm just quickly going to go through the formalities, and then I've got around 25 stocks for you to consider in the coming 7 days. Obviously, make sure that you're doing your own analysis and all the rest of it. And please, 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 as always, just please watch that or read that important disclaimer. It's very important. So, if the stock market has had you doing the Ronaldo, if you've been learning from losses, if you feel like you're maybe pushing a rock up a hill at the moment, maybe if you're learning from YouTube, this analysis will probably help you out quite a lot. Very brief intro as to who I am. I'm Sam. I run Honeystocks.com, and this weekend analysis is ridiculously popular. I'm in such a good mood. I'm off to Mexico next week. I'm spending a couple of months working poolside to escape the UK weather, so that's a welcome bonus. And like I said, I have my Honeystocks.com trading school. Feel free to check out the website if this is your first time here. But just to give you a bit of a heads up, this is the performance. I log every single trade idea that I post to my community, my group, etc. on my website for complete transparency. I've reviewed, researched around 25 other competitor websites, and nobody else does this. So please, again, feel free to go and check that out. But I can tell you now who this is not for. It's not for any of you guys out there that are looking for get-rich-quick schemes. I am not a day trader. That is the first thing to just get out there right off the bat. I do not day trade. I have a style of trading that's based on an intermediate time horizon. And when I say that, I'm talking about I will be in a position generally for weeks. But if we have some good positions, then I will be compounding and be in those positions for months, hopefully in a good trending market, because I understand that that's where the real money lies. It doesn't lie with taking stocks from $50 to $52. I'm looking to take stocks from $50 to $100, and it works very, very well. My trading setup looks nothing like that. That's my general trading setup when I'm out and about on the road. I have my trusty iPad and my pint. So that is literally how I do it. Obviously, there's a lot of analysis that goes in on my laptop to be able to obviously bring up charts on the iPad and so forth. But literally, that is all you need to be a good trader. So rather than me rambling on, I'm just going to start going into the charts. As I said before, please do your own research, do your own analysis. Make sure any trades that you want to take, make sure they fit with your own trading plan. If you don't have a trading plan, if you don't have any idea whatsoever what you're doing, then stick around to the end because there are a couple of options for you. So let's just get started. First up, we have Adobe. Now, as we can see there, Adobe is now starting to push up against resistance. Now, there are a couple of lines of thought on this. One, take this entry based upon this mini breakout here, or obviously wait for a clearance above 280 if you are looking for a breakout towards all-time highs. That's really Adobe at the moment, and you'll understand that the charts that I present are incredibly clean looking. I don't like to clutter my charts with a lot of junk, with a lot of noise. Yes, there's a lot of information going on in the background that you cannot see because I obviously can't give away all my information, but certainly for the purposes of this chart, it's a very basic looking chart, but there is a lot going on in the background. And I think in order to consider entry, you are looking above 260 or above 280. So I think that's something that you should perhaps add to your radar. Next up is Atlassian. I think it's Team, Team. I got my clients in on this move to $90. And lo and behold, textbook earnings play. It's something I cover in my blog. You feel free to check out my blog on earnings. But we've had this incredible move to the upside, and obviously the move just keeps on going. So it's actually offering a lot of opportunity for compounding further positions. I think you can be bullish on team above 100. I think the optimal entry has probably just been missed if you did not get in today. I like any entries around 101, maybe 102 as an optimal entry. But if we take the view that team is now going to go through the levels 110, 120, and so forth, there may be some decent risk to reward for you if you want to take that entry. Ball Corp, incredible recent trend, good earnings. It's slightly overbought at the moment, but certainly I think if we get the inevitable pullback, which I would expect, then certainly I do like an entry just maybe above $50. I think we can be bullish on Ball Corp, provided that we stay above this $50 level. Um, Next up, we have Boeing. Ridiculous move recently. It's now cleared the significant hurdle of $400. It does have the look of being a bit overextended. So if there's any of you out there on Boeing at the moment, a very valid way to play this is, given that we've now cleared the next price level, you may wish to want to tighten your stop loss to protect profits now, perhaps just below this level here. Maybe give price a little bit of room to breathe. But I think given that we're in massively overbought, well, not massively now, but we are in overbought conditions, it would stand to reason that we get a little bit of a pullback. And if we drop to that 20 moving average, or even further, it would certainly pay, in my opinion, to book some profits. Obviously, we could just get a bounce off here from $400, which would be nice, but certainly I think it's quite valid now to obviously protect profits. Coupa software. Now, this was highlighted, I think, with one of my clients during the week, maybe last week. It was a move above $80. It's obviously progressing incredibly nicely. For me, it doesn't really represent massively great risk to reward at the moment. Yes, we're looking at a favourable potential chart pattern there, but I do like an entry above $100. So I think you should probably look to set a price alert there. Dexcom, I think above 150, given the previous resistance that we've seen there at 150, it certainly makes sense now to set the price alert and look to possibly take advantage of Dexcom above 150. Eli Lilly and Co. Healthcare LLY. I like it a lot. I'm a strong supporter above $120. I think we need to wait for that level to clear. For me, that brings in the optimal entry, and I think there's room to run on that. Decent earnings, I believe, so certainly I'm watching that one very, very closely. Estee Lauder, I think above 160. I think we can look at this one. Obviously, we've had a good move this week on the back of incredibly positive earnings. We are overbought at the moment, so it wouldn't surprise me if we know the tendencies with gaps is for price to come back and fill in these gaps before moving off again. So A couple of schools of thought on this one. If that does happen, certainly given the nature of the positive earnings, etc., you may want to set a price alert for, something around 140, 142, something like that, just in case price does fall back. I think that might be a decent pullback entry into Estee Lauder. But likewise, again, if you want to take a breakout, I think above 160. Next up, we have good old Etsy. This is one that I got my clients into last year at around $30. It done incredibly well. Was it $20? I forget, but certainly it's one that's potentially offering entry now. One of my clients actually got in on this move here at the bottom, which was just a beautiful play. It's already 6, 7, 8% in profit. So well done, Max. And certainly, again, I think you can probably set a price alert there for around $58. Maybe look to take an entry above 60. Obviously, you can figure that one out yourself. Next up, HubSpot. We've had a break to all-time highs. So we've had a breakout, a little bit of a pullback. That pullback looks like it may have offered entry yesterday. So optimal entry possibly missed, but if we take the view that this is going on and it's going to keep motoring, then don't let me stop you from taking the position. Certainly, do your own due diligence, make sure it fits with everything that you're doing, and make sure you plan and you structure your trade, and you are content with your decision. So that's the first. I think, geez, I probably just got through 10 charts there without even blinking. If you're watching this and you're thinking, what the hell is this? What's this guy talking about? How is he doing this? This is just what I do. I've got a very structured style of trading. It's a style that is built upon simplicity, not complexity. I also have I suppose, a style that's based upon quality and not quantity. And as I said before, you'll never see me doing the day trading game. It's just not the way that I choose to do things. I've done it before, not a lot of consistency with it, but certainly, once you move into a disciplined trend following style, it's amazing the results that you start to see. So quite simply, if you are day trading, I certainly take the view that that's pretty much what you're doing. And obviously, as I just said, I don't like to trade that way. I prefer to trade, and it just gives me the freedom, and I can jump on a flight and go and spend a couple of months in Tulum working from the sunshine if I want. And that's what I suppose the trading game and the structure has provided me. So I would always encourage you to change your style if you are finding inconsistencies, because if you keep doing the same thing over and over again, you cannot expect different results. So certainly, if you don't have any consistency, like I said, stick around for 5 minutes at the end. I might have a couple of things that might interest you. So I suppose that the next place I need to maybe touch on is just, just for a minute, just the overall market, because this is a little bit of a concern, obviously, for myself, and it would be negligent of me if I paint a picture of, flowers and roses, and, the market is, it's been incredible, don't get me wrong. January was just ridiculous. If you didn't make money in January, then again, I would urge you to stick around till the end. But the S&P 500 has met a bit of resistance there. Now, what we can say with that, when the overall market gets a bit of resistance, we can expect a decline in stocks generally across the board. Now, yeah, you'll always get stocks that defy the market and keep going up anyway. There are obviously other areas of the market that will be moving, and there's an example of that in a second. But Certainly, you have to always be mindful of what's going on, and this is tech. Again, tech's met resistance over the last couple of days, and this is something that obviously I warned the client group that I have um, 3 days ago. They were aware of the charts, before the declines happen. So everybody's prepared, and I think that's the structure that I have. Now with the Dow, slightly different. We had the break above the resistance area, but it's come back, maybe retest, possibly fallen away a little bit there today. So it's certainly now at the mercy of the weekend news. There's obviously, incredible news event driven market environments at the moment. When we talk about Trump, when we talk about Brexit, trade wars, China, it seems to be never ending. But absolutely, the one thing that we need to be mindful of is what's going on in the overall market. So pay attention to that. So next up, we've got MasterCard. Again, a couple of schools of thought here. You can certainly look to take advantage of any further pullbacks if we see any in the market. I do like an entry around 211, maybe 212. And also, by all means, set the price alert for any breakout. I think we'd be looking, I think it's maybe something like 227, maybe 228. So certainly MasterCard is now starting to become interesting again. Micron Technology. I deliberated, whether to add this into the analysis, but I had a couple of emails and a couple of messages this week about Micron, and what's appealing about the chart. You can look at the chart there, and if you make direct comparisons with some of the other charts that I've discussed in the analysis, I don't understand where the appeal is in taking a position in Micron. There are simply better options available. And does it offer value? Possibly. But I'm obviously a technical driven trader. It's just not demonstrating any. And saying that, you can make a case for it demonstrating strength at the moment. It's started on a pretty decent trend to the upside. So yeah, but for me, it's not interesting. It doesn't meet my rule set. But certainly that pullback, if you're a little bit more flexible, um, it may offer opportunity. But for me, it doesn't. There's too many areas for price to overcome, and I just see far cleaner options available elsewhere. Next up, we've got MDB. Now, this is obviously one that's been highlighted, and I know that my group have profited incredibly well on this, and we're close to breaking above $100, which is obviously a good level for any stock. So those of you that are looking to get in on MDB, I think above 100 is pretty. It's a legitimate entry. We are now approaching $100, so we can potentially expect a bit of resistance there. So it's also valid now to completely tighten up your stop losses and preserve any profits that you've potentially got. If you get a rejection of $100, then it's fine to collect your profits, but you can always buy back in again. If it breaks out above 100. So a couple of ways to play that. That's MDB for you. Nvidia, very similar to Micron. I just don't see the appeal. I was bearish on Nvidia when we had this breakdown way up at 240. So certainly I don't see the appeal with Nvidia. Does it offer any kind of value? Possibly. I don't like how they've perhaps aligned themselves with crypto and all the rest of it. But like I said before, I'm a technical guy. I'm not a fundamental guy, so I don't see the appeal there in Nvidia at the moment. Next up, we've got Okta. Again, got my guys in on this at $75. It's now moving through the levels. I think some of my guys have now started to compound positions, perhaps above 80. So yeah, I mean, if we take the view that it's now going towards 90, then Okta, I think earnings might perhaps be next month. I would need to check that, but I do know, we need to be trading with price, and price is going up. So certainly Okta is one that I think should be on the radar of absolutely everybody. Um, Now, I talked a bit before about some of the areas of the market that move when other markets decline. Palladium is a perfect example of this. And this is why my trading group, my tuition is, recognized the world over. Is because I understand that, when one market declines, there are other markets that are starting to move. And Palladium's, certainly a fine example of this. And certainly, it just keeps on moving. So certainly, I think that that's obviously an ETF for Palladium. There's many ways that you can play Palladium. Maybe you don't like ETFs. Maybe you want to, trade the straight commodity. Maybe you want to go and find some Palladium companies out there. I sometimes can't be bothered, hunting around for those kind of stocks when, the path of least resistance for me would be the ETF. But certainly, that's something that I think everybody should be considering at the moment as well. Planet Fitness, we're building a bit of a base at the moment. It's certainly completely valid to take a position there at the lower end of the base, and obviously eventually we all know the saying, the bigger the base, the higher in space, and that might be something that we see in Planet Fitness in the near future. So I think two ways to play it. Take an entry at the lower end of that base, wherever you define it, and you can also set a price alert, I think, for above $60. Next up, we've got Shopify. It looks like we're closing out today, maybe at all-time highs. So Monday's certainly going to be interesting for Shopify. We're kind of had this incredible move to the upside recently, like the whole market had in January. So depending, I think, obviously what happens with the overall market on Monday, it will be very interesting to see, where Shopify goes. If we get a market in a tech decline, it stands to reason that Shopify is going to decline as well. So if you're in Shopify, it's absolutely valid again, I think, to tighten up stop losses. Given that we are now trading, close to these previous resistance levels, it just makes sense to me, given the choppy history of the chart. If you're in it, it's absolutely valid to tighten up stops and protect your profit. Next up, we've got Square. Now again, I posted a chart to my guys here around, I think I posted the chart at 68 or 69 when we had this, very clear bounce from the moving average there. And, lo and behold, it's starting to move, which is obviously nice. But certainly, you would need to look at this as various targets. If you get a decline, you certainly just get yourself stopped out and say thank you very much, 10%, or you get the breakout and then you make the judgment that we are going back towards 100, and you can perhaps look to compound further positions on this move. But that's certainly something that you'll need to consider. Next up, Starbucks. Now this is one that I posted last year to my group. It moved into profit. Then we had the market decline. Everybody stopped out, no loss, absolutely no problems. But I do like Starbucks. Obviously, I'm an avid drinker, and I do enjoy a nice coffee, espresso, and yeah, I've got no issues, moving back in on Starbucks above $70. So I'm watching that one very, very closely at the moment, and certainly I do like it as well, because I think there's a tendency for a lot of traders to maybe keep going back to the same stocks, and maybe get a little bit too married to certain sectors and certain areas of the market. I kind of like to spread around. And obviously Starbucks is not going anywhere anytime soon. And yeah, I think above 70, I think it represents a decent move. incredible trend that we've had. It's had a beautiful move. Yes, it's had a little bit of recent blip like the rest of the market, but make no mistake about it. This is a stock that's demonstrating real strength at the moment. So Starbucks is something that I think should be considered above 70. Also now Zendesk. Now, incredible move last year. Multiple charts posted to my clients on an incredible move to the upside. Since then, along with the market, it's kind of fallen away. But lo and behold, the exact same strategy that was available when trading Team was also actually available with Zendesk. And actually, during my session with one of my clients, Vince, this week, we actually discussed this on our call. And certainly, textbook, we had the gap up, overnight on the back of positive earnings. Wall Street does what Wall Street likes to do, and obviously just attack the stock. Profit taking then kicks in. And where did it move to? Not rocket science, guys. It comes back. It retests the previous resistance area. Lo and behold, bounce, off it goes. 10% move in the last 2 days. So certainly, Zendesk is one. It's overbought at the moment, so you would expect a little bit of a pullback soon. But I think provided $70 holds, I think we need to be bullish above $70. And I think Zendesk, given the previous history that it's had, I think probably represents a decent shout. But I do know that there's a lot of you out there that are, probably struggling with your trading. There's a lot of you that maybe want to improve your results. Maybe you just want to learn a structured approach to technical analysis. And I understand that these charts don't look complicated and so forth. And the reason for that, as I said, is I've got a very disciplined and less is more approach. So I understand the path to success is a difficult one. I know that most traders will spend, quite some time before you can fine tune everything. But, at the end of the day, I think we all need to just ask ourselves, how much happier would, our lives be if we could cut out all the noise and make, just incredibly good decisions. And if you also felt like, you weren't at the total mercy of Wall Street and the stock market and all the crap that we see on a daily basis, it just makes things just a lot easier. And especially when you start to implement trading plans, rule sets, you can have those in place for the rest of your life. And just to go back to what I provide, like I said before, I've obviously got a very disciplined approach. And as I said, I publish every single trade idea into my group on my website now. You can probably see there that there's only room there to take it up to December. If you go onto my website, you can see the additional trades since then, and have a look at it, and you can get a feel for kind of what I do. I think this probably speaks for itself, and I know it speaks volumes, and I understand it's why I get so much attention that I do. But it doesn't have to be a case of waiting a couple of years and learning from all your losses. And it's absolutely soul destroying to watch all these YouTube videos and get all this information, but you don't understand how to put it together. And I think the best way I can put it is, I think anybody can go onto YouTube and learn the procedure for heart surgery, but you'll never be a heart surgeon. And the same thing applies with trading. You get all this information and you acquire all this knowledge, but until somebody sits with you and puts you through it all and makes you understand how everything interacts, what technicals interact with what other technicals, and how does the market interact with all this, until somebody shows you and sits down with you, if you're getting inconsistency, you cannot expect anything other than more inconsistency. So don't feel like you need to, bury your head in, book after book after book. Again, it's really not needed. Um, Ultimately, what will happen is you'll end up just, flipping the birds to the stock market and trading and saying to yourself that it's too difficult, and you're probably getting stopped out after trade because again you don't know how to overcome what Wall Street's doing. So um, we just genuinely believe in making a difference at honeystocks.com. I have built something incredible with just incredible traders from all around the world. I think I'm over in 16, 17 countries now, and it's such a great environment. And I suppose the question that you maybe have to ask yourself, if you're sticking around to the end here, it might be because you are having a bit of inconsistency. But, obviously you can carry on doing it the old way, or you can maybe look to, take it a new way. And, quite simply, it just goes back to, if you do what you always did, you'll get what you always got. And, for me, like I said before, I have the complete flexibility to go and, do whatever I want when I want. And so, yeah, that's it, guys. If you are wanting to make a change, I allocate time every single week to speak to you. My calendar is open. Every time I run one of these promos, I open up my calendar for the week. Now, this week I am going to be allocating, I think, only 4 days. The reason for that is I've got quite a lot to do just before I jump on my flight, etc. But if you are serious about making a change, if you are committed to getting the results and changing the patterns that you're currently in, then jump on my website, click on apply, choose a time, tell me what you struggle with, and we'll have a chat. It's really as simple as that. I don't pressure, I don't hard sell. I'll simply have a conversation with you to see if I can help you or not. If I can help you, quite often I'll just help you on the phone if it's just a quick fix. But if it's clear that you are needing a complete overhaul, if you need to learn a completely new approach, then we can discuss that, and you can suss me out and I can suss you out to see if we're a good fit for each other. But if you have enjoyed this, then don't be shy. Just go on, choose a time. It really is that simple. We'll get on a call for maybe 20 minutes, 30 minutes max, and we can just see what we can help you with. It's that simple, guys. But if I don't speak to you, then I absolutely wish you the best of luck with your trading. Hopefully, this has found you well and has helped you in some way. And from the bottom of my heart, thanks for watching.